Good afternoon, everyone. As you've just heard, my name is Clayson. I am CEO of ECR Minerals, and thank you for taking the time to listen to the following presentation, which I hope you will find interesting. Okay. Yeah, please, if it's in focus, please take note of the disclaimer. All right. ECR is an AIM-listed company. It had a market capitalisation at the opening price this morning of only £1.7 million. The company is focused on advancing gold projects in Australia and the Philippines. Turning to Australia, our wholly owned subsidiary, Mercator Gold Australia, recently agreed to acquire 100% ownership of the Avoca and Clayson gold projects in Victoria, Australia. We're particularly interested in these projects because at the Avoca project we have identified an opportunity to generate relatively short-term revenue from reprocessing historical mine dumps, the origin of which we will come on to a little bit later. And Mercator Gold Australia is significant as a vehicle because due to its former existence, it has around $66 million Australian dollars of tax losses in it, which we expect to be available to reduce its taxable profits should it go on to successfully bring the operation of Avoca into production. So clearly that's potentially quite a benefit. As well, these projects, there's significant exploration potential for two styles of hard rock mineralisation, and there's a very strong history and indeed present-day mining culture in the area. In addition to the Australian projects, we have the option to earn 50% interest in the Danglai project in the Philippines, and we hold 100% of the SLM gold project in Argentina, the virtues of which will be discussed later. You heard a little bit about me. Our chairman, Bill Howell, is a very experienced geologist with almost 50 years of experience, in fact, and has fulfilled a lot of senior roles in the gold mining industry, particularly with Normandy and then later with Newmont after Normandy's acquisition. But he also has quite a lot of experience in the junior sector, which, as you can imagine, is a different culture and does require a slightly different skill set. But Bill is able to bring both aspects to the table. Dick Watts, our technical director, is an experienced mining engineer. He has spent most of his career with Anglo American, operating major mines in South Africa. He then moved into the consulting world with SRK and currently with Barra Consulting, and he's picked up various roles along the way in junior companies, particularly in the former Soviet Union. The Avoca and Clayson projects are located both within 200 kilometres of Melbourne, obviously the state capital, Victoria. Victoria is somewhat forgotten nowadays in terms of Australian gold mining. It's been supplanted somewhat by Western Australia, but it is one of the world's great gold provinces. Total recorded production to 1998, it's believed to be 80 million ounces or thereabouts, and alluvial production alone almost 23 million ounces, making it possibly the largest alluvial gold project province in the world. So what that means for us in terms of present-day potential will be discussed on the next slide, but please be advised that there is a competent persons report relating to the projects which is available on our website, and that the exploration targets on the following slide have been extracted therefrom. So, exploration targets. At the Avoca project, the most immediate target is the waste dumps, which originate from the historical mining of alluvial deposits in the area, and it's believed that in that relatively small area, approximately 740,000 ounces of alluvial gold has been mined, and as you can imagine, that's left quite a bit of material lying around, which still contains remnant gold, given the relatively basic techniques that were applied when these deposits were actually mined, which began in the 1850s and then proceeded up until about the 1950s in fits and starts. Related to that, we believe that these dumps also may contain some saleable gravel and sand, and markets have been identified for that locally, and hopefully that will make a meaningful contribution to the bottom line of the eventual operation. There remain unmined alluvial deposits in the area. We have an exploration target there for the so-called deep lead alluvial deposits that are within our licensed area. Now, deep lead is a local term for a buried river channel. So it's essentially an ancient river that has accumulated a certain amount of gold against the bedrock and then been covered over by basalt or fluvial terraces. So that gold is sitting there, and it can be quite high grade. The hard rock targets at Avoca are also, there's over 20 identified prospects within our licensed area, only one of which has ever been drilled, but which have produced quite a lot of high-grade gold, according to the historical records, and a number of which seem to merit investigation with modern exploration techniques. At the Clayson project, which is more of a modern mining district, it's located around 20 kilometres from the Fosterville gold mine, which is the largest producing gold mine in Victoria, and currently recently produced its 1 millionth ounce. It's also located about 30 kilometres from the Costerfield gold antimony mine, which is also a significant producing operation. Slightly to the north of the tenement is a historical open pit, not that historical, in the 1990s, that produced a reasonable amount of gold, and it's believed that the structure from which that gold was mined continues into our project, and that will be an area of focus for us at the early stage. The Avoca project, this is what these waste dumps look like. So they may not look like much, but there is gold in there, and as you can see, the material is lying around, and it's easy to get at, and it doesn't require blasting or any of that nature. Now this little concentration here of former alluvial gold mines is believed to have produced about 100,000 ounces of alluvial gold, and that's where this picture is taken. So as you can imagine, there is a fair bit of waste material lying around, and the potential for that waste material has been, or an attempt has been made to quantify it here. Before we move on from this slide, please do take note of what an exploration target is and is not. As you can also see, there's a number of clusters of hard rock deposits here. This red outline is the outline of the license that the Cape Gold Australia is acquiring. So as you can see, quite a lot to get our teeth into. And the area, of course, is relatively free of population and other irritating things from a mining perspective, but it is also reasonably accessible, very good access, roads, power available, so on and so forth. The Clayson project, this is the Clayson pit, which lies just outside our license here, and this is the interpreted continuation of the structure. We will be commencing a drilling campaign in this area in June, and hopefully we will see from that the sort of results that would confirm what we believe the historical results and previous activities tell us about the remaining potential of this area. Just a word about the current climate for gold mining in Australia. The Australian dollar gold price, gold being sold usually in US dollars, is actually almost at a record high, which is significant, of course, because the mine in Australia incurs its operating costs in Australian dollars while selling its product in US dollars. So that constitutes quite a significant tailwind. You can see that there have been some very successful investments made in the last couple of years in Australian gold production. In addition to the effect of the foreign exchange driven gold price effect we just discussed there, fuel, labour, consultants and other key mining inputs have fallen in price quite significantly in Australia as the heat has come out of the boom in the last few years. So that may align quite well, all of that may align quite well for us, is what we're trying to do. So our immediate plans At Avoca, we are looking to demonstrate the viability of reprocessing these historical waste dumps. Our first step there will be a mineral resource estimate for the dumps. At the same time, metallurgical test work on samples from the dumps. And those two things will feed in, along with other inputs, to an economic study that will set out the capital requirements, projected returns, and timescale for getting this project into production. At Baillieston, as mentioned, we're going to commence a 1,000-metre drilling programme focused on primarily on the Byron area, which is just to the south of that open pit we saw a picture of. We do have some historical results, which are indicative only, of course, from the Byron area, but I think you can see that there are some quite interesting numbers thrown up there, and we're particularly pleased that these higher grade zones occur within a sort of disseminated lower grade cable, which may augur quite well eventually for bulk mining should we proceed that far. So we expect to complete the above programs in May and June, and after that we will know a lot more about the potential of these projects, and hopefully our confidence will be rewarded and the recognition in the market will be there. Just a word about the acquisition costs of all this potential. The deal that's been struck is for consideration for the two projects of Australian dollars, $250,000 of ECR shares in various stages, the majority of which would come after commercial production if that's achieved. There's also a 20% net profits interest royalty to the vendor in respect of mining of the dumps, and a 10% net profits interest royalty in respect of mining other deposits. The total royalties payable are capped at Australian dollars 3.5 million. And this is nice because the interests of the investor and the vendor are aligned, and most of the benefit to the vendor will only accrue if projects are successful. Moving on to the Danglai project in the Philippines. Mineralisation there is an intermediate sulfidation epithermal type, and we've identified multiple steeply dipping veins in the main prospect area, which has been the focus of our work, and some of these veins are up to several metres wide. Drilling in 2014 confirmed this mineralisation over a strike length of 400 metres and a vertical extent of 250 metres, so that's from the top of the highest drill hole to the bottom of the lowest drill hole. In total, we've drilled around 1,800 metres of RC and diamond drilling. We've also completed trenching, test pitting, detailed mapping, and a lot of surface and underground sampling in some of the historical workings that exist there. Now, ECR has the right to earn 50% interest in this project by obtaining a mining licence within 10 years of the commencement of the deal. That was in December of 2013, and by making certain milestone payments, again, most of which are geared to the success of the project. We're currently the operator of the project and leading all expenditure. Our work to date has earned us, whatever happens in the future, 25% interest in the project, and we earn that by estimating the mineral resource, which is compliant with 943-101, and we'll come on to that in a moment. There is currently a moratorium on new mining licenses in the Philippines, and should that still be the case when we're ready to apply for mining license for this project, the 10-year period would cease to elapse, so there's no question of running out of time. So many of you will be familiar with the geological setting of the Philippines, but it is a junction of various tectonic plates. It's a very tectonically active country, and as a result of that, partly as a result of that, it is a very well mineralised country. This is mirrored on a small scale at the Danglai prospect, which is also quite structurally complex, so that which partially explains why it is mineralised. It also makes it quite challenging to explore in some ways, but the gold is there. And what you can see here is an outline of the current estimated resource, which I'll deal with on the current slide. So this project lies within the Baguio district, which is in the north of the Philippines, where it benefits from good peace and order, security, which obviously is important. It's produced tens of millions of ounces of gold in the past. It's still producing today, albeit on a relatively small scale, and as a result of that, there is a social acceptance of mining which is so important, not just in the Philippines, but wherever one hopes to develop a mine. And there have been a number of world-class mines in the district already, so it's a good address. So our initial resource, which was estimated late last year, is 1.2 million tonnes at 1.5 grams per tonne, thereabouts, for 60,000 ounces, thereabouts. This is really only part of the deposit's potential. This resource pertains only to the near-surface oxide zone, which has been formed from the weathering and oxidation of the primary mineralisation, which, as mentioned, occurs as steeply dipping veins, which do continue to quite some depth. And this resource has been modelled to depths of only around 50 metres, but this does mean that despite the relatively low grade, it is accessible and could be mined with a relatively low strip ratio. Full details of this resource are in our 43-101 technical report, which is available on our website. That same report also contains details of a target for further exploration at the Danglai project. This pertains to primary veins which do permeate the oxide zone and continue below that. As you can see, the grades are much better, and this does add up to a fairly significant potential deposit, adding the oxide and the sulfide zones together, which may be identified or delineated through further exploration. So just to try and put that point across a little differently, this is the oxide zone here, down to around 15 metres, and the veins, of course, are continuing through the zone like this. It's also the case that the oxide zone continues a little deeper than this. So I think one can see that with further exploration, it would probably be possible to increase that resource quite significantly. So, in summary, why the Philippines? The Philippines is a mining country. Skilled people and services are relatively easily available and at relatively low cost. Has been the venue for some quite notable successes by international and local companies in the past 15 years in terms of both discoveries such as Tapacan down in the south and producing stories as well. And there is consequently a relatively high level of interest still in the country within the global mining industry. Why this particular project? Well, it's in a positive social and environmental setting. It's easily accessible with grid power and water close at hand. Topography is favourable for mining. The climate is relatively benign. We were able to acquire a relatively encouraging historical data set, which included important items such as drilling results and metallurgical test work, which indicates that the ore is amenable to processing. And we are quite encouraged by the results of our exploration to date. Now, the exploration permit for the project is currently up for renewal, and that has been applied for and is moving through the processes, the wheels of which turn quite slowly in the Philippines. Also, there are elections coming up next month in the Philippines, and they are quite potentially significant for mining because the current administration in the Philippines has not been pro-mining, hence the moratorium on new mining licenses. So, depending on who the new administration is constituted by, there may be a thawing of the climate for mining in the Philippines, and that may be good for us, or it may not. So we'll have to appraise that quite carefully once the result of the election is known, and then make decisions as to further exploration at the Danglai project. Just a word or two about the SLM gold project. This is a project that we own 100% of in Argentina, northwest central Argentina. We've identified 3 key gold prospects, and we've done a relatively limited amount of work on particularly on El Abra in the north, which has been drilled, and here, which has been bulk sampled. The results have been reasonable, but we've chosen to direct our energies primarily elsewhere. But there is a producing operation quite close by here, which is locally owned, and in light of the change of government in Argentina in late 2015, there is a bit more local interest being shown in these types of projects, and we are seeking a local partner to advance this project further down the track. Some of the historical workings at El Abra in the north and here, and this is the local plant, which is pretty small, but it's potentially of a suitable scale to process these kinds of deposits. Just a word or two about the ECR share price, which has not performed very well in the last 2 years, in common with most of our peers. As you can see, there is a very close correlation with the TSX Venture Composite Index. As I believe you heard in one of the earlier presentations, the TSX Venture Exchange has more comparable companies to ECR, junior mineral exploration development companies, than any other, and it is therefore the primary bellwether for the sector. As you can see, our performance has closely tracked this index, except for the last couple of months. So hopefully we may do something of an adjustment in that direction, but time will tell. As I think you will have gotten the impression from this presentation, we are transitioning from a primary focus on exploration in the Philippines, partly because of this, that, to what is more what is likely to be more appreciated by investors in the current environment, and that is relatively safe jurisdictions where there is the prospect of near-term gold production. And on that basis, the board, given its mandate obviously to direct the company's resources where they're most likely to add value for shareholders, we've decided to make this transition. And that concludes the presentation. If there are any questions, I'd be happy to answer them.